Hello guys and welcome. In today's video we are going to talk about how you can make more profits in Cesim Global Challenge, and also we're going to take on how you can recover from losses in the Cesim Global Challenge. First of all, or the first thing first, we are going to talk about the demand. Now if you look on your screen, you see that the demand growth rates are of 15% in Europe, 20% in the USA, and over 40% in Asia are expected. Then in terms of costs, we see that the USA sees an increase of tariffs to $15 per headset as a way to further weaken the Chinese economy. And also, the in-house manufacturing costs are expected to fall in the US by 5% and to remain level in Asia. Then in terms of finance, the Chinese currency continues to devalue compared to the US dollar. Then euro strengthens, and interest rates are unchanged in USA and Europe, but up a quarter in Asia. So after looking the market outlook, this will just give us an overview of what to expect in this round. So from the market outlook, the next step is go to the demand. Under the demand here, we see that because first thing you come into the network coverage forecast, here we see that in all the three markets, Tech One is having a very high network coverage. Then in the USA, it's followed by Tech 2, then Tech 4, and finally Tech 3. And in Asia, Tech 1 has the highest, followed by Tech 3, Tech 2, and lastly Tech 4. Then the USA, in the Europe, sorry, it's Tech 1, then Tech 4, then Tech 2, and finally Tech 3. So if you look at our network coverage, you see that if we introduce a product Tech 3, we'll be able to sell in almost all the three markets, because the network coverage of Tech 3 is rising, same as the network coverage for Tech 4. But in this case, we are going to start with Tech 3. So under the network, or under the estimate for the total market demand, here we start with we'll start with the USA, and we see that the USA, the market will grow by over 20, so let's give it 21. Then Asia, they say that it will grow by over 40, so we can give it 43. Then lastly, in Europe, they say that it will grow by 15, so we can give it 16, because we just want to be these not so much of ambitious, but we're expecting to sell more than what the market outlook predicted. Then in terms of market share, we'll start with the USA. So maybe you can say in the USA we'll sell 16. So let's say 16.2, because I want to sell about 1,500. So let's say 16.1. Okay, let me say 16.0, because I don't want to have inventory, because too much inventory will take much of your earnings or much of your profit. So let me say 16.0. So that's good, because I want to sell about 1,500 from my projections. Then in the USA for Tech 2, I want to sell, let me give it 22, because I believe I'll sell about 2,100 units, so I'll give it 22. Then in the Asia for Tech 1, I'll give it, let me say I want to sell 24%, or estimates I'll have 24. Or and because I want to introduce a new product Tech 3 in Asia market, so I'll introduce it, then give it 8.1, because I believe I can sell about 1,900. Then in Europe, I'll give it For this tech 1, I can give it 13.3. Let me just maintain it. Then this one I'll give it 18.1 because I want to sell more than 1,700 units. So that's it in terms of decision for the demand. So our next decisions are production. So let's go into the production part. Under the production here, we see that we have a production planning. So this red sign is unsatisfied demand. So you should just make sure that you have less unsatisfied demand, if not zero unsatisfied demand. So for this case, I want to have capacity allocation. So for tech 1, I'll do 40 in 40 because I want to balance. So 40 in Asia, so that's being so I can do 50. Then also here I'll come and do 50. Okay, so that's okay because I can see. So from there for tech 2, I'll do, let me say, allocate 30% of my total production of my capacity. Then for this one, I'll do, let me say 20 because I believe so this is tech 3, sorry. So this one was to be tech 3. So I'll do 25. So let me do 30 because I'm aiming at reducing this unsatisfied demand. So 31. So it's 48. So I'll do 32. So I have cut production. So 31.4. Let me say 31.5. So 31.6. So 31.7. Okay, then for take 2 here, I'll do 55. Let me say 55. No, so this one is take 1, so let me just leave it at 50. So for take 2 in USA, I'll do 35. Then I'll have 35.1. So let me say 35.4. So I believe that's what I can play in this one. And if you look at my production cost per unit, we see that in-house manufacturing is more cheaper than contract manufacturing, simply because one production cost of producing 1 unit of tech 1 in USA is 54, but getting it from contract manufacturing is 130. For tech 2 it's 35. Then for tech 2 is 106.7. Then getting it through contract manufacturing is 143. So we just want to save on cost because we are trying to recover from losses and make maximum profits. So the next thing is that I'll go into investment because I believe I want to increase my plant in this round or in the later rounds. Under investments, we have demand estimates. So here is the capacity planning. These are my sales and my capacity. So because I believe I'll be improving on my sales or the number of units. So my demand estimates, so this one will be 9,000. Then for round 7, it will be, let me say, about 10,000. 365. Then for take 2 in the next round, I can say I'll sell because it's improving. So I'll say 4,780. These are just demand estimates. There are no clear way or any clear formula of calculating it. Just you write there your estimates. Then you have 5,874. Then in terms of take 3, so for this one I'll do 2,871. No, sorry, 2,856. Then this one I'll do 3,537. Then no tech 4 because I'm not producing tech 4 in this round. Then in terms of plants, I'll just want to make construct one plant in each country. So the next step here is from the production. The next step is R&D. So let's go to R&D. Under the R&D, because I believe if you see here we have two types of development. First, you can have in-house development. Then the next one is buying technology and design licenses. The in-house development, it's cheaper, but it will take a full year for it to come into place. But if you buy technology and design licenses, it's instant, but it's more expensive. So we can try, because for Tech 3, let me say I want to buy one feature. In just an example, we see that it's 55, but buying money needed for new feature here is 39,593. We see that it's more cheaper than buying technology and design licenses. So for this case, I want to buy a new feature. So I'll say I want to invest. So I'll invest 39,593 because I want to add new features in the next round for Tech 3. So from there, let's go to marketing. That's where we just make decisions in the pricing, promotion, and the number of features. Under the marketing, because I believe that I'll be improving my number of features, so I also have to increase my pricing, but not that much. So in the next round, I believe that, so in terms of competition from my competitors, I'll have 7 features. Then I'll sell, let me say 320, because I just want to make more sales than my competitors. Then for Tech 2, in the USA, I'll have, in the last round, I had the 5 features. So in this round, I want to have 6 features. Then I want to sell at 370. Now, if you look at your estimated demands and projected sale, we see that in the last round, I sold 1,069 units. So in this round, I'm projecting to sell 1,529 units. And for producing one cost is $96.4. So I believe that by selling it at 320, I'll have some positive margins. Like I'll be making some profit and cater for some expenses here and there. So the next one is Asia. So let's go to Asia marketing. Under the Asia marketing, with the, in this case for Tech 1, I want to, I'll give it, let me say the number of features that I'll provide for Tech 1 is 7, because in the last round I had 6. So this is 7. Then increasing the number of features, definitely I'll have to increase my pricing so that I can get my contribution margin. Then in terms of number of features for this one, I'll put 3 features. So 3 features is the production cost for this feature is 2,524. So this is in Chinese currency or in the Asian currency. Then in terms of pricing, I'll have 3,700 because I also want to make some profits. Then the next one is Europe. So let's go to Europe. In Europe, for Tech 1, I wanted to have, because it had 5 features. So in this case, I'm giving it the number of features I'm topping out to 6. Then in terms of pricing, I'll have, I want to give it 250. Then for Tech 2, because I want it to be more competitive than the other features, so I'll give it 4 features. Then I'll maintain the number of the selling price. I'll not change it. Then that was my marketing decision. So The next part is logistics. So let's go and make decisions under logistics. Under logistics, I believe that I started with the, so for this case, I started with the, I met the demand in regions where we have production facilities first, then I met elsewhere. So from priorities in terms of USA, where I have a production plant in USA, my priority was USA first, then Europe, then Asia, because Asia has a production plant. So I'll start with USA, then I met Europe. Then same for Tech 2, I'll start with USA, Europe, then Asia. Then the priorities from Asia, I'll start with Asia, Europe, then USA. Then for my Tech 3, I'll start with Asia, Europe again, and USA. Because I believe I want to meet the demands of my product or the demand of my market. So that was logistics. So next, let's go to tax. In the tax segment or this tax docket, I'll not change anything. I just want to leave it the way it is. So for this one, I'll not make any decisions. Let me go to finance, the final one. Under the finance, here we see that we have, so let me say we have this cash. So in USA, we have about 4 billion. Then in Asia, about 1.8. Then in Europe, we have about 1.5 billion. So I believe that's still intact. And because I want to increase on my share price, so I'll have to issue dividends. So for this case, I'll issue 5,000 in terms of dividends. And because I also want to ensure that my stocks are not diluted, I'll buy back 1,000. So here we have that one. And because I want also to pay some of my long term, I'll give it, let me say, I'll pay 500. So that's 500. So I want to pay much of my long term because you see it has gone down. So I just want to balance my financial structures. Then in terms of internal loans, I don't see if there is a need of me just moving cash from one place or the other, because I believe these funds are enough in case I have anything that will require cash in those regions. Then in terms of projections, I'm projecting to have 4.7 in terms of sales revenue. Then in terms of profit, I'm projecting to have 1.7. So that's okay, because in the previous round, I had 419. So in this round, I'm projecting to have 1.7 million. So that's commendable. So that's it for today, guys. We have learned on how we can increase on our profits, because you see that my profits are 1.7. And also, if you are making losses, you can use my decisions or strategy. You can just follow the strategy that I applied, and you can become a profit-making company. So that's it for today, guys. In case you have any question, feel free to contact me. Have a nice time till next time we meet.